results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
And Fed policy will be driven by the pace of the data. Same policy will remain accommodative.
Futures off sessions low, still down about 1% on the day for a little more than 4 pennies.
Hi, I'm Mike Bellafiore. Welcome to Live from the SMB Training Classroom, combining information to make trading decisions. So today's presentation is about combining market information to make really good decisions. Just like for the New York Yankees, they combine people of different skills so that the sum of the team is better optimally than all of the parts individually. And as a trader, that's what you're trying to do. You're trying to take all of the information and put it together in a way that you can make better trading decisions, just like a great team. So the goals for the session today are going to be to help you to understand the things that we think about to make a pro decision. What are the variables that go into making a good trading decision, and to help you to become a better trader. So combining information to make trade decisions. There are 5 things that go into a good trading decision for us. The first thing we want to know is the big picture. Second, we want to know the intraday fundamentals about a particular stock. Third, we want to know technical analysis, the longer term levels and the intraday levels for a particular stock. Fourth, reading the tape. And 5, intuition. Those five things we put together with each one of our trades decisions to make the best risk-reward trade decision for each one of our trades. Let's talk about that. So I like to think of a trade decision with those 5 variables inside of this circle. So we don't talk about 3 right here, but reading the tape should get a certain portion of the circle. Intraday fundamentals, charts, intuition, and the big picture should all go into this circle. Each time you're thinking about making a trade, think of it as an information circle. A lot of people just look at technicals to make trade decisions. And I think internationally, most students think that trading is about technical analysis. But we like to think of 5 things. We like to think of the big picture, technical analysis, long-term, intraday fundamentals, reading the tape, and intuition. We want to put all 5 of those things together, not just technicals. Let's talk some more about that. So for each one of the plays that we make, there should be a different weight per play for the big picture, intraday fundamentals, technical analysis, reading the tape, and intuition. You know, sometimes, some trades, technical analysis gets most of the circle. Sometimes, on some trades, reading the tape gets most of the circle. It's called trading. What's most important is for you to learn how to think like a pro trader. And that means putting all 5 of those variables together. That means putting all 5 of those variables together for each trade. That is thinking like a pro trader. It's not even so important that you get the answer right. In fact, it's not important if you get the answer right. It's important that you understand the process to putting together good trades. And it's not like you're going to walk away from this video and be like, oh, Mike said to put together intuition, technical analysis. Is it technical analysis? Yeah, technical analysis, reading the tape, the big picture, and intraday fundamentals to all my trades. Now all I have to do is just go hit a couple buttons on my trade station. No. What I'm saying is, what you need to do is go away from this presentation, from this video, go away from it and start to think about those 5 variables for each one of your trades. And over the course of time, you're going to get better at putting together those variables. It's called trading. No one said this was easy. You're developing your skills to make better trading decisions. You do not want to be a one-trick pony. And one of the trades that pisses me off the most is a one-trick pony trade that I hear about certain traders making at certain professional trading places. And so literally the trade goes like this, and this just pisses me off. I mean, there are arcades that sell people on the dream that this is how you can become a pro trader. And the trade is something like this. Look for a really big bid in the marketplace and step in front of that big bid. Look for a really big offer in the marketplace and step in front of that offer. And that's your trading playbook. Right? That may have worked at some point along the way in the world of trading, but that doesn't work anymore. And you certainly do not want to be a one-trick pony where the trade that you're learning could go away and now you're stuck with what? It's most important to understand how to think like a pro trader. You want to have a full playbook of trades. So when we say intraday fundamentals, what do we mean? So the big picture for us is important market levels. We're talking about the 5 variables. You have the big picture, you have intraday fundamentals, technical analysis, reading the tape, intuition. The big picture, that means what are the important technical levels in the marketplace? All right, so if we're close to market resistance, we probably don't want to get long lots of stocks until we get above this market resistance. All right, if we're pulling into market support, we probably don't want to be short lots of market stocks until we actually get below these longer term levels, no matter the news, no matter how good the tape looks, no matter how good the chart looks. All right, we really probably wanted to get below those levels. You want to understand the news story. What are the headlines? What are people most interested about for the overall market in the street? So people are talking a lot about whether or not the Fed is going to continue to print money. People are talking a lot about right now whether or not interest rates are going to go up. People are talking a lot right now about inflation. Okay? We have a budgetary crisis that we're hitting up against. Those are the important things that the market is most concerned about. And so when we say big picture, when we think about factoring in the big picture, that's what we mean. So intraday fundamentals, how do we define that? We want to find stocks that are in play. We want to find stocks that have fresh news in them. You want to be trading these stocks because when important intraday levels are formed, they move off of these levels. There's good movement off of important intraday levels when there's a stock in play with fresh news. Stock in play is something that has fresh news, unexpected fresh news. There's more trading opportunities when we find stocks in play. They're more likely to trend. The intraday ranges are larger. In short, it's easier to trade stocks in play. Cheat sheet for finding stocks in play are anything up or down 3% on increased volume. We want to trade those stocks. It's not the only stocks we trade, but a big thing, something unique at SMB is we want to trade the stocks that are in play with fresh news. And we want to find levels that are formed in these stocks and trade off of them. Okay? So I want to be trading Cruise because Cruise had terrible guidance for the full year. I want to be trading it on the short side. I want to be trading GoGo because they beat on earnings for the quarter and are guiding higher for the full year. I want to be long that stock. I want to be in DDD because that sector is really hot. I want to be in Facebook because Facebook recently crushed numbers for mobile ad sales. All right, one-trick pony. So again, this just pisses me off that some education is really about stepping in front of big bids and stepping in front of big offers. That's not trading. I don't know what they're really trying to do there. All right, technical analysis. So you certainly want to, when you start your trading career, it's easier I should take a step back. It's easier when you start your trading career to follow the trend. And when we think about technical analysis, we want to understand longer term, where are the important levels on our longer term charts, and intraday, where are the important levels. I think it's easier when you start your trading to look for trends. So the easiest trade to make is a trend trade, something that is strong on the longer term chart and strong intraday. So DDD has been that way the last couple of days. It's been broken out to the upside in the longer term charts. And intraday, there's this beautiful bullish flag patterns that are forming every 75 cents. Those are good types of setups to start with when you start your trading career, when you get the longer term trend and the intraday trend together. But you want to be thinking about technical analysis. Okay? And the other thing you don't want to be doing is you're short because the intraday chart looks very bearish, but you're running into very, very significant longer term support. So I think 45 is a big level in Facebook. Facebook's close to 46. I don't care how weak the chart looks intraday in Facebook today. If it were to look weak on the intraday chart today and pull into 45, that longer term support is more important, is much more significant than no matter how weak that intraday chart looks in Facebook on a day like today. Reading the tape. So this is a skill that not a lot of people have. The tape is the level 2. It's the bids, the offers, all of the prints that go off in a particular stock. This is certainly a skill that takes time to learn. We talk a lot about reading the tape in our individual training program titled Reading the Tape, original name there. And in the SMB Foundation, we talk a lot about reading the tape. We certainly teach our guys on our desk to read the tape. It helps them to find better entry points. It helps them to find more trading plays because charts are lagging indicators. Charts are lagging indicators. The tape is a leading indicator. The futures are a leading indicator. Charts are lagging indicators. The tape is a leading indicator. Leading indicators are better than lagging indicators. Leading indicators can tell us more than lagging indicators what's next. What's next? And so for us, we're going to find more plays because we're taking a look at these leading indicators. And we're going to see where the important intraday levels are. Here's a good example in COF. This 4230 level was a big catalyst. We call it Meet Mr. Catalyst. So in this trade, we were trading off this 4230 level, and this was we saw an unusual hold on the offer at 4230, and we got short. And this catalyst from the tape, unusual hold on the offer is something when we see we want to get short. And if we're thinking about that big circle, if you see an unusual hold on the offer, that should take up a good portion of that circle, probably 80% of that circle. You see an unusual hold on the offer, probably 80% of your decision-making process should be just based on the tape right there. And I actually talk about unusual hold on the bid in the playbook in the chapter after the chapter on Shark, but it's Shark's trade. And we talk about unusual hold on the bid in Night Capital when it was close to going bankrupt. So unusual holds on the bid and unusual holds on the offer are instances where the tape gives us lots and lots of information to help us make really good intraday trading decisions. And that's what we're doing here. I'm not really that concerned about what's going to happen in the future. I'm concerned about what's going to happen today. I want to be in the stocks that are moving today. I want to be most efficient with my money today. One of the reasons why we outperform the entire market is that we're more efficient than other people. I don't have to wait all year for a particular position to strike. We're good at finding stocks that are probably going to move off of prices now. And so recently we were trading AMGN, and this is a good example of how we put together different factors into a trading decision. So on the open, there was technical level, there was a huge print, and then it got below that huge print. Amgen had just reported intraday fundamentals. The stock had tanked below that level, technical analysis this is a long time ago, SPY 110. So, we're talking about bigger picture. We start to look at SPY. In this case, SPY 110 is a really big level. And so when we have an example like this where we're looking at a big level in the marketplace, as long as we're below 110, we probably want to be more short. And we want to be looking for stocks that are weak. And we want to be shying away for most stocks on the long side unless they have unusual strength to the marketplace. But if you're trading something like a CAT, which is very much a market stock, and you come up to this 110 area, you probably want to get out of that position no matter how good it looks intraday. Almost always that's probably a sale because we're coming up against intraday resistance for our big picture. And so when you're talking about particular stocks, you want to be thinking about the big picture. You want to be thinking about the news. You want to be seeing, does Amazon have great news? Does AXP have great news? Does COF have great news? What's the housing number going to be? Okay, in this example that we're looking at, all right, we're still actually holding below this 110, as you can see. And what did we do? Well, we tanked on Friday all the way down to 108.10 from that 110 level. And so if you were trading stocks on the long side and you weren't cognizant, if you weren't aware of that 110 level, you might have been confused. And this is a good example where 110 was long-term resistance. We went there, and it's not a surprise that we necessarily went down. And we go down, and this 108.10 level is a level. We got to watch for that too. It's probably a place to take off some of your shorts. All right, so when you're thinking about putting trades together, you want to be thinking about combining your trades. Okay, you're putting together the big picture, you're thinking about the tape, you're thinking about intraday fundamentals, you're thinking about technical analysis, and you're thinking about intuition. And for us, as experienced traders, intuition is that little voice that we hear in our head that tells us get longer, or tells us take off risk. Intuition is something that you very much want to rely on when you become an experienced trader, but it really is mostly for inexperienced traders. And the one thing I want to say about that to developing and newer traders is if you think you have intuition, respectfully, you don't. Okay? You don't get intuition for probably a good 3 years of trading. So if you're sitting there and you're saying to yourself, well, I think that Tesla is going to go down because I just have a gut feeling, you don't. You don't. You don't. You get a gut feeling after you've sat at your seat for 10 hours a day for 3 years and you've watched the way the markets move. And I think one of the things that gets in the way of traders becoming good is they rely on their intuition, their gut, when they don't have it developed yet. You can develop it. You should be working on it, but it should take time. And one of the things that I wrote about in One Good Trade was sometimes people come in during an interview and they always say to me things like, I just have a feeling when the market's going to go down. When I watch CNBC between 3 o'clock and 4 o'clock, I'm always right about figuring whether it's going to trade up or down. And when I hear things like that, that's not impressing me, okay? Intuition is something developed over time. So, look, lots of people are just making decisions off of technical analysis. We want to move you away from that. We want to help you make better decisions. Make that good technical trade with some intraday fundamentals, with some fresh news behind it. Make that good technical trade with reading the tape behind it. Make that good intraday technical trade with the big picture behind it. And then after time, make all of those trades with some intuition behind you. So that's how we think about the markets. That's how I put together my trades. My job is to make good risk-reward decisions, and those are the things that I'm thinking about. Thanks for watching.